Ever wish you could trade in just a few minutes a day without feeling like you're risking it all? I used to be glued to the screen, but now I spend less time trading and haven't lost control for a second. So I'm going to show you in this video exactly how I pulled it off and how you can get your time and your sanity back too. So here's the problem most traders don't realize they're stuck in. They're glued to the screen, they're checking charts constantly, every candle feels important, every move feels like it needs a reaction, and even when they're profitable, they're stressed, and when they're not, it's even worse. The market dictates their mood, their schedule, and of course their attention. Think about it like a thermostat in your house. You don't sit there all day adjusting the temperature every time it changes slightly. You set the range once and the system does the rest. If it gets too hot or too cold, it's just going to respond automatically. All you ever do is occasionally check that it's all set up correctly. And that's exactly how what I'm doing now actually works. Because the way out of this isn't trading harder or watching less randomly, it's removing decisions from the day entirely. And that comes from doing three things. So the first step is using an algorithm, of course, but not to be clever, but to actually become consistent. So once the strategy is defined, the best thing that we can do is define it and write it in code. And then the algorithm's job is simple. Just follow it as exactly as designed. It won't hesitate, and it doesn't reinterpret rules mid-trade. And it doesn't, of course, change behavior because it read the headlines or the news or a Twitter post when price spikes or how the last trade went. And that's really where most manual trading actually breaks down. Because even with a clear plan, humans struggle to execute the same way every single time. And what happens is, as humans, we tend to delay entries or we exit too early, we override rules because something feels different. And over time, those small deviations, they quietly erase any edge that we had. So an algorithm just removes that variability completely. Entry happens when conditions are met, and exit happens when the rules say they should. So if the setup isn't there, nothing happens. The system is just going to wait. And that consistency is actually what creates the edge over time, not through prediction, not through conviction, but just repeatable execution. So once the algorithm is in place, you're no longer making decisions in real time. The thinking has already been done, the plan already exists, and the system is simply carrying it out. And that changes the entire experience of trading because you're no longer reacting to every move or watching every candle. You're just monitoring a process, not managing emotions. And this really does cut down time. The stress drops because the responsibility shifts from deciding to just verifying that the system is operating as intended. And that's how on a day of huge liquidations, I was actually able to spend it with my son at the beach, just hanging out, because I went through the motions in the morning, I checked the system, and everything was absolutely fine. And that's the foundation that everything else builds upon. And step two is engineer the strategy around your portfolio. So this is the step that most people skip, and it's actually where things break. A strategy on its own doesn't mean much if it isn't matched to the size and structure of the portfolio running it. Now, you don't just simply turn on a system and hope it fits. You engineer it around the capital that it's responsible for. And that's exactly what we do using our safety order framework with the Minotaur calculator. Before anything goes live, we define the architecture of the trade through position sizing, safety orders, spacing, and total exposure. These are all designed based on three things: the size of the account, the level of risk the portfolio can tolerate, and the volatility of the market itself. Now, this work happens up front, not in the middle of a drawdown, and not while price is moving quickly. So once that design is in place, sizing is no longer something that you think about in real time. It isn't guessed, adjusted, or debated based on how the market feels that day. The system already knows how much risk it's allowed to take and how it should respond as price moves through these different zones. So as volatility expands, the system behaves within its predefined limits. And as price pulls back, safety orders deploy according to the plan. And if conditions deteriorate beyond what the structure was designed to handle, the system simply doesn't increase risk to compensate. And that's what keeps things stable. By engineering the strategy around the portfolio instead of forcing the portfolio to adapt mid-trade, you remove one of the biggest forms of stress and time suck with this era. There's nothing to tweak, there's nothing to rescue, and there's nothing to second guess, because once it's live, a system, it just runs. And because the risk was designed when the thinking was clear, not when emotions evolved, you don't need to touch it at all. And step three is you need to watch one level, not the whole market. So the third step is what actually gives you your time back. Instead of watching every candle, every indicator, and every headline, you focus on a single reference point. And that's what we call the power law support when we're trading Bitcoin. That level is the first real line of defense in the system. And above it, nothing dramatic needs to happen because the system is going to simply capture the volatility and generate returns. Trades will open, trades will close, and the cash flow will just be constantly produced all automatically. The only thing you really need to monitor day to day is that power law support level, which lines up closely with the CVDD terminal price as well, so you can get a lot of references for what this price is. As long as price is above that zone, the system is operating in its comfort range. That's it. So to be very specific about what this actually looks like day to day, my routine is incredibly simple. I wake up in the morning, I make my coffee, I read 10 pages of a book that I'm currently reading, and then I check the system. I look at the positions just to confirm that's still running as expected. Then I check my TradingView alerts to see if anything important has triggered overnight. And then I just glance at the liquidation levels just to make sure everything is still within the safety margins. That's all I do on a day-to-day basis. There is no chart watching, there is no managing trades, there is no reacting to every move. The system is working and it's already doing it all for me. I'm just confirming that everything is operating the way it was engineered to. And once that's done, I move on with my day. That's the difference between trading manually and running a system. And if you want to see what building a strategy like this looks like, go and watch the video where I built a 6-figure trading bot in less than 30 minutes.